Thank you very much, Sean. Thank you very much for everyone attending our session this week. It's this subject that I'm going to talk about kind of came more of a spontaneously, and the reason for that was after the sell-off on Tuesday, January 18th, in the evening. I thought it probably would be very timely if we look at the markets from the long-term point of view and see where we stand from financial markets to commodities, currencies, and see if we are in an inflection point. Because as you know, the big, again, the market, the guidance we have from the S&P, that dictates majority of the, especially if you're doing equities like the stocks. So especially when things go down, about 90 to even 95% of the stocks follow the S&P 500. Now, when things go up, usually it's about 80 to 85%. So there is a huge correlation what the big indices are doing, and we want to be aware of, again, where we are heading. And on top of that, I thought this class, if we could use it as a more of a reference point, I have a few charts that I want to share with you, but this is something maybe even a month from now, 2 months from now, you can kind of refer back even a year from now and see where we stood at this date and where we are going again, or where did we go. So, and also I think the other thing was I wanted to share with you how I look at the charts from the long-term point of view. So with that in mind, again, I purposely did this last night. First of all, I was going to meet with you early today. So these charts are as of last night's closing, not today. And of course, today we had a follow-up of what happened last night. So with that in mind, I wanted to make sure that everyone is aware that, again, these numbers are not hot off the oven, as they say. Basically, these are last, most of them are, although I did update it as of 12:30 this afternoon at the end, so you can have the most updated numbers for January 19th. So with that in mind, let's start chart. So as always, as I mentioned, the S&P 500 is the most liquid, is the most followed index in the globe. So it's not just in the United States. So everybody watches that. So that's what I think is imperative for you to know exactly where S&P stands. So what I'm looking at is, these are majority of the charts are going to be on a monthly basis. So I'm looking at from the Bollinger Band point of view. I want to see what is happening from the stochastics and MACD. Where do we stand? So this is after the sell-off we've had already this year. And I would say, again, like the 4,500 area, 4,800 to 4,500 has been, that's the range that we've been floating for last few months. And that is important to keep in mind. Once we break down below the 4,500, I would be very careful to see if there is more selling coming. And as you know, the majority of the selling is the concerns about the interest rates, the concerns about obviously the inflation, which we'll discuss more. And the other thing is, if you recall from our investment themes ideas, I mentioned, basically the earnings also play a role. So it's the Fed, the central banks, it's the earnings, is interest rates, is inflation. So these are the things we want to watch. So this is where the market is. So right now, although, again, this is not the full month, this is just so far what we've done this month, the stochastics are still embedded. We've been embedded since, July of 2020, and actually before that, June of 2020. So, and MACD is still trending up, although it's coming down a little bit, but still there is no a sell sign right now. So this is one of the ways I look at it. So far I would put a check mark. I would watch it. But again, we don't have a sell signal. This is a signal for if we go and touch the Bollinger Band, that's a good time basically to take some profits on a monthly basis if you have a long-term hold. But at this time, we still don't have a sell signal, again, from a long-term point of view. When from the squeeze point of view, I've mentioned, we will see on QQQ. So we noticed that 3 months ago, the momentum actually slowed down. Now, it hasn't completely come down, but the colors did change. So 3 months ago, we had a little bit of warning that really we are running out of steam. So we really like to see when we come out of the squeeze, it's 8 to 12 bars, dots are the as far as efficiency and as far as the ultimate results. Usually they are the ones that are up to 12 bars is the most profitable bars. So, but you can see, so this gives us a little heads up. On the other hand, we've been just hugging that the middle channel. It's our linear, our regression line. And so we are still, the trend is up, we're still going up. So from a monthly point of view, again, as of last night, we still didn't have any selling on, at least in S&P. And one of the reasons I mentioned S&P's components, we have the technology, is growth, but also value. There's a banking and energy. So basically kind of neutralizing each other. So one of the warnings will be if we ever had a sell-off in the financial as well as the technology, then that will be a warning. So again, the momentum has slowed down, so we want to watch for that. And from the Fibonacci point of view, I'm looking at the futures, and this is on a weekly, because monthly would have meant not much. Because really a lot happened in the last couple of years. So we went, I wanted to look at an extension. So I went from the high to low, and we actually went to our 200% objective, and we are floating around right around that area. And just 45.73, we're back and forth. So you can see these numbers are becoming a major support, not anymore. After the sell-off of perhaps today, we'll see where we stand. But these are just some of the support lines. 161.8 is important from this, again, extension from the high of 2019, 2020 to the low of March of 2020. NASDAQ is the one which has been hit hard. So one of the things, again, this mega cap stocks, because of the interest rates and because of the fear of, the slowdown in buying back, the alternatives, what will happen to if I have higher yielding, for instance, a treasury bill or some kind of an interest bearing, why do I want to buy more risky investments? So there have been that concern. And of course, the easy money has been made. One of the thoughts are like Tesla, without that easy money, it would have never come even close to where they are now. So there's been a lot of easy money. So basically what has happened is it has been affected. So we can see a doji here. We hit the upper Bollinger Band. We are right at the support. We are embedded, but the MACD is in a crossing point. So you have to watch that, because once the MACD goes, then that will be a warning sign. And that's why we want to go down to weekly, then down to daily. But from a big point, again, picture, if you have a long-term investment holders, then we are in a support. We are above the 18 months moving average. So far, there is the warning, but not a sell-off yet. And the same thing, our linear regression. I had mentioned this maybe a couple of weeks ago that like QQQ, the NASDAQ 100, you can see the momentum has really started coming down. So again, that was a little heads up. We've had our 12, 13 bar, so it has slowed down. So we want to watch that. But again, the uptrend is still intact, and we are above the 21-month moving average. I didn't do Fibonacci because it's very interesting. Fibonacci is very similar to all the financial instruments. I mean, the equities. So one on S&P was, I think, good enough. Now, this is what is a concern: the Russell 2000, and it has been, as you can see, we were really in a range bound for almost 10 months, actually February of 2021. And this is as of yesterday, we were sitting right on the 18-month moving average. So my support was at 2115, and I believe we broke it today. So this is a concern. Once the Russell goes down, that's usually, they call them granddaddy. So it could take the other markets with it, because this is a speculation. So as you can see, we are right in a border of being overbought. So it's still embedded. But the question is, the Nifty just on a monthly, it just crossed. Now, the question is, again, this is just, we've had what, 18, 19 days. So the month is not over. So these can change by end of the month. So we want to follow this and watch it closely. So end of January, that will be something that we have to revisit. So I want to share these charts with you so you can perhaps do it on your own and basically see what your thoughts are. And if you think, there's a follow-up on the selling, but these are what I'm using. So let's see. As far as IWM, again, you can see how the momentum completely changed. There's been more selling. Actually, the A wave is in the crossroads, and it's actually going to the selling side and downside. And I also put the RSI here. We are, halfway. So we were overbought, as you could see. So there were some warnings on a monthly basis. We are very close to the 21 monthly exponential monthly moving average. So basically, we want to watch that as well. So that's as far as IWM. Now, the Dow had been the strongest, obviously, because of the presence of, there's a financial, there's a healthcare, there's industrial. So, and because of being the, as far as the price cap index, basically the more expensive stocks have kept it up. So, and it is embedded. So we have nothing there to, at least to be concerned right now. And the MACD is still up, although we've been losing a little momentum. And it's still above my long-term support. So you can see it has been stronger than NASDAQ and Russell. And when we look at from the linear regression, again, there's a common theme. We are hugging the midline, but the momentum has slowed down. So again, by watching this, then we go down to weekly, then we can go down to daily to see if there's a pattern. And based on that, we want to be, we really want to be ready. For YM, this was the highest we've been, just a regular retracement I want to see. So, the next, if there's a major support, this is 2 years, this will be the area that we will watch if we are going to go down. That will be the major support for us. Now, this is, I think, the culprit of all the things that are going on. And this is the 10-year note and the 10-year yield. And the 10-year yield is the culprit. And we had the big selling yesterday because that was the highest we had been in about 3 years or so, about 2.5 years. So we hit the 1.86, 1.85, 1.86. The question arises, this is again on a monthly basis, we are heading toward this is 100 monthly resistance. So we are very close to that. I've mentioned before, I think the 2% and under, the markets can live with that. That's the magic number, I believe, above the 2%. So a couple of things. We can see that stochastics is overbought. There is a divergence here, but the MACD is still up. So there's a little mixed message here, but maybe this is good news for the markets, seeing that maybe there is a little light at the end of the tunnel. We might have the resistance, and hopefully having like the Fed meeting next week, maybe there will be some good news as far as the inflation with the supply chain and what is happening with China. So what is happening with Omicron. Maybe that will be, but for now, obviously you can see we've held above that 18 months moving average, has been a nice support. So it's been a long time since, this goes back to 2019, since we've come close to that 100 monthly moving average. The opposite is obviously in a 10-year note. You can see the 10-year note, we're just hitting the Bollinger Band, but we are still far from that 100 monthly moving average. But it's kind of the opposite. As you can see, that becomes a support for the 10-year note, and we are oversold. We never got embedded, so we shall see if the momentum will change up on the stochastics, but MACD is still on a sell signal right now. From the linear regression, we have the TLT ETF, and we are under the 21 monthly moving average. We did have momentum change a little bit, but then the momentum is back. You're looking at the A wave. A wave had a few months of a nice momentum, and then last month we went to red again. So we're on a sell signal there. This is a sell signal on, as far as the momentum on the squeeze. We are below the 21-day. The only maybe savior, we're on the 1 standard deviation. So we'll see if that's going to hold, at least for a little relief rally for short term. Also, from the point of view of the Fibonacci, when we look at the, we go back to, this goes back to 2018. And incidentally, that's we talked about that last time, and we had the rate hike came in, and you can see how we sold off in the bonds, and then Chairman Powell came back and said, well, I made a mistake, and we're gonna reduce the rates, and that's why we've had this big rally. So we just broke on the 38.2. So this area is important, between 38 and 50%. So we want to watch numbers here. The same thing on the 30-year bonds. Again, I want to look at from different point of view, from high to low, more recent, and basically we went close to that 50%, and we just retraced. So we are in a again, this looks negative, double top. Again, this is a monthly, so it looks like if we retrace on 30-year bond, there would be a big resistance right at the R23.6. So talking about that, we can see the financials who are following the interest rates closely. They still, comfortably up. They're embedded. The MACD is looking good. So we are above the support line, and basically they are above the 18-month moving average. So it doesn't look much danger, although, as you know, starting last week and then this week, we had the Morgan Stanley, and we had basically Goldman Sachs, we had Bank of America, last week we had Wells Fargo. So the earnings are coming, and this week we'll have more of that. So, but the market has reacted well, and although there was some selling, but we are still in a comfortable area with the financials. And the same thing, we are comfortably above the as far as between the our mean and the first standard deviation line, but we are way above the 21-day moving, 21-month moving average. Again, it's interesting for the 3 months, and this goes back to like November, and then we had, October, we had a nice move, and then the momentum has been really slowing down. So We want to watch for that. So we want to look at the weekly, but the trend is up. So we want to be aware of that. So let's talk about the dollar. I think the dollar has been sending a mixed message. And as you know, when the idea is when the interest rates go up, that it's favorable to the dollar because of the interest rate parity. So we should have a really up dollar. I want to look at this. The reason I want to see this is going back to 2015. And if you close your eyes and came back today, we really haven't done anything. We've been really range bound in the dollar. So the question is, how far, how much higher can we go? Is the dollar has the power? Again, from the economic point of view, you would say, well, if they're going to be there's between 3 and 4 interest rate raises, the dollar should be up. But I'm not 100% sure. So at least in the short term, this is the message that we are getting, that there is concerns that maybe dollar is not as strong as it is, but also the seasonality too. So we shall see. February is usually a better month for understanding the dollar behavior. We are overbought. We are not embedded yet, so we want to watch that. But the MACD has crossed. So, but you can see again the range, the volatility band is narrowing. So it's telling us, okay, there's a contraction going. So this is important to watch because it's going to affect obviously the other currencies. It's going to affect the commodities. And that will give us another indication of what are the thoughts of the market about inflation. And I want to, again, look at the Fibonacci, and you can see there's a cluster point right around here, and it became a resistance. I've talked about the 90 being an important area of support. So in the past, we've been had like the 88 has been a support. So but the 90 has been a big number. We are way above that. But it looks like the market is floating around in this 38 to 50%. And then the ambush, we went to the ambush zone, we came back, we went to the 38.2, and we are floating right around there. So it looks like this is the area I would watch. So if you want to have your numbers, this is either you have to break above this, and most likely we've had been as high as a 104, and in a very long term. So we've had that 104, and then and in a short run, I would say 88.5 would be our support. So let's talk about gold, because I think that would be a subject for this year with every year they talk about gold. We go through these cycles, and we went through that in 2001, 2002. We had a nice leg up, then we had a big correction, 2011 down. So is this the decade of gold? So we are, again, in an inflection point, and the similar things about as far as gold has been very range bound in that sense that there's a talks that, well, gold should be 5,000, gold should be 2,500. So basically, we are very much in a narrow range. I've had the 1662, for instance, for a while. We are right around our 18-month moving average. Now, the MACD, you can see we've been going down. The momentum has been going down. All the trends still up. But the stochastics, it gave us the heads up in July, August of actually was last year. And basically now we are oversold, and now the momentum is going up. So that should bear positive, and if it continues. So this is, again, it's yesterday's close, so it's not today's close. So we want to watch this area, see if we can break above. This is 1829. So again, this is I don't have the hindsight. So we'll come back and review if we are close to that. So that's the magic number we want to look at, 1829. And if it does, the natural way will be that we will go to the next nearest thing, which will be the Bollinger Band. So from linear regression, on the other hand, we are actually above the 21-month moving average. What concerns me is we are in a squeeze, not in a bad way, but what I like to see is on a monthly basis, I like to see that we have momentum change. If this changes to yellow, and again, the month hasn't ended yet, so this is not complete. But you see, we are above that 21 monthly moving average. We are in a 1 standard deviation. As you can see, the high that we've had, at that moment, you see that the momentum changed, and that was a good indication. That was that there was some selling coming. But also, I see the A wave is trying to cross, and it's the yellow. Also the relative strength is a mid-range. So it's not oversold, but it's not overbought. So that's what we want to watch. So gold is an inflection point as well. And when we look at from the Fibonacci point of view, and going back to 2016, to the high that we had last year, or actually it was 2020, we see that there is, again, a cluster point right at the 50%. We stopped there. So this has been our range for past year and a half. So we are right now floating between 38.2 and 23.6. So either break either way, especially if we go above the 1900 area, then that could take us to much higher. Also, we'll be talking about miners. So I was going to do the class today, but I thought this was more important to talk about the long-term view, and then we will discuss the miners. And miners are, you can see, this has been my support zone and actually resistance as well. And we are just hugging that. We are under the 20-month moving average. We are just becoming oversold. So that's something to watch, but the MACD is still down. But if there is going to be a move, this will give us a heads up once we start moving up. And, that the next resistance for GDX, for instance, the miners ETF is $34 area. So we want to watch that. So it hasn't given us a clear, buy signal, not something like this. So we want to get the confirmation. So I don't have it yet on a monthly basis. And the same thing in silver also. It's interesting that we became oversold, and we are right on that support zone that I've had, and usually I write puts when we get there, but we are under the 20-month moving average, and the 20-month moving average is $25.25. So we want to watch that as well on a monthly basis. But the same as gold, that was 18-month moving average, but on a 21 exponential moving average, we actually are above that. So that's a good sign. We just went in the squeeze, so we want to watch that. So if the squeeze fires and if the momentum is up, you can see silver, I believe, the next goal could go to the $30 area. And basically, that's the silver, this is SLV. But yeah, somewhere, when you look at the upper channel, and every time we've gone, we've tried to hit it. So there could be a big breakout if the silver does that. And that's the reason I like to watch the miners, because basically part of the silver will be pulling the miners with it. And one of the other reasons, I've said it in the past, silver is really half and half. It follows the gold, but also it follows the economy. So if we have some resolution in the economy, silver could be a winner. But right now we're at the squeeze. We can see how we have respected that. Again, you cannot make this up. This is Fibonacci, and we have respected that 50% retracement twice, double bottom. Now we are at the 38.2, and this is what we want to break. And let's see if we can do that. crude oil. That's another uh, important commodity to watch for. In some ways, maybe we are overstretched. In some ways, Goldman Sachs is not yet. A lot of people in Saudi Arabia, they think this is going to go to $100. So we had a big breakout, and we hit, and that's why I think Saturday I had mentioned that we have really hit our overhead resistance. So in many ways, right now, in the short term, there's a lot of forces working for the crude oil. Of course, we had a couple of days ago, we've had what happened in United Arab Emirates with the Yemenis invasion, what is happening with the Russians in Belarus and Ukraine, and the tensions. And basically, what we found out from the geopolitical point of view, we usually have the overreaction and then things kind of fizzle out. So what we've had the making of this, and basically I think the policies from the political side of things, obviously there is movement from obviously the environmental friendly. So a lot of oil rigs are, they haven't been fixed. So there is that the supply has been kind of minimized, although when we can look at from the Baker Hughes numbers that, well, there's production coming, but it has not, kind of, from the United States point of view, we've kind of limited ourselves, and we kind of given our winning hand to like Saudi Arabia. As a matter of fact, it was about a few weeks ago when Saudi Arabia had said, the oil ministers had said to all the institutional investors, I dare you, if you want to short, or the hedge funds short the oil. There's no way. And the oil was in, I think it was mid-60s. So basically they have the winning hand, and they're gonna squeeze as much out of this. But generally what happens is we have a snap, and then we kind of correct ourselves. So with that in mind, you can see we are at the resistance. We have hit the Bollinger Band. We are actually overbought. We just got out of the embeddedness. We are embedded, but we're very close to becoming overbought right now. Again, the month is not over. MACD is up, so still there's a power in moving upward, but it might be short-lived, in my opinion. The same thing when you had the linear regression channel. We see we are comfortably above the 20-month, and then also the A wave is actually above. So there's a strength. So we can, we still have room to go to the second standard deviation. From the long term, looking at going back to 2013, we see we are right at this, we are in ambush zone. We are right at 61.8. So what happens, usually in the ambush zone, we will have back and fill, and here we tried, we came back. Now the question is, if we break this, then we can see the next, it could be $110 at 78.2%. So it's not far-fetched thinking of $100 oil that was prediction, especially if the Omicron and all the things, they go away. So, but I think there are a lot of other solutions at this time with the more production. So, but this is what the charts are telling us. So we are in another inflection point when it comes to oil. So when we come to the energy sector, the XLE, you can see that actually XLE is right against this 100 monthly moving average. As a matter of fact, I lightened up just last week. I had bought the XLE end of March of 2020. So I got out some last week. So there is resistance, but we are embedded and the MACD is up. So that doesn't mean that we're going to have a sell-off. It was a good time to take profits. Now, the interesting thing is from the linear regression side, although the momentum is still up, and it's A wave is up and the C wave is trying to cross, we are right against that, the second standard deviation on LRC. So we want to watch that for the XLE as well. And I'm going to bring everything back to the commodity ETF. We've talked about the DBA, which is more of an agriculture, but has everything in it. That's the sugar. And you can see from the agriculture or commodities ETF, we are right at the 38.2 retracement. So usually there's a little hesitation. So we'll see what will happen at this area. So we want to watch that. So basically, we looked at the dollar, the equity indexes, we looked at the interest rates and bonds, and we look at the commodities. I want to go a little outside the box and take a look at what is happening with China. Now, this is the ETF for the largest ETFs. It's the iShares Trust China, it's the FXI. This kind of caught my eyes. It was really interesting with a narrow range as far as a monthly, and we are actually right on the lower edge of the standard deviation. Now, the question is, the momentum is still down, and as far as the A wave, this yellow, it's low. The interesting point is we go back to, go back to about 10 years or so, we've had really been a range bound, and here we are again. So I do not have confirmation on China yet. There's quite a few things we have to think about when it comes to basically, when you think about China, we have to think about, first of all, the lunar year starting end of this month, January 31st. So that's 1 week off. The property situation, then we got to look at the Chinese central bank, the easing as far as the interest rates, lowering interest rates and easing money supply. So basically, they're trying to really accommodate, especially their concerns about the properties. So those things are good, but also with the complete lockdown, the production. Look at the copper. Copper had a nice jump. I mean, this will be for Saturday, but the copper, again, the Chinese accommodating with the properties. China had a move, but I mean, the copper, but copper also, with the holiday, that 1 week closing for lunar year, things could change. So, I mean, there's not much going to be much demand. So, but this is just a food for thought. Again, we can go back to weekly. I'm not really 100% to get back in China, but we are under the 21 month moving average. But it's interesting that we are where we are. It's in the 2 standard deviation below the, that's a negative 2 standard deviation. So this is a food for thought. So you want to watch that. Also, from the Fibonacci point of view, we still have a little room left to go to the bottom, to go to the 78.2% retracement. So these are the areas you want to watch. So if we bounce back at 61.8 and go back to ambush zone, then you can see your targets. So talking about China, we're talking about emerging markets. Again, emerging markets, look, we've been in a really big range bound, and this goes back all the way 2007. So we've been back and forth. We've had contraction, expansion. Now we're getting the contraction. We are right on the 18-month moving average. The MACD crossed, the stochastic has crossed. So on a monthly basis, we don't have the buy signal yet. And I believe we will have this contraction. We need the clarity. And again, next week, I will be talking about some of the opportunities in, non-China economies, where could we look at, what currencies you can look at. But right now, we are right in the mid-range, basically. And this is VWO, which is the Vanguard's Emerging Markets Fund ETF. And the same thing, you can see we are right on the cusp, 21-month moving average, right under the mean. And you can see the momentum is actually down. I just put this in. I will discuss this again next week. This is on the Brazil ETF. It's been all over. It's unbelievable. I mean, you could make tons of money with EWZ and lose a lot. So we are right again against that 23.6. So it's right this area. We see what happens, but no buying signal in Brazil. Let me bring it to some stocks, and I had some well-known stocks, see where they stand. And it was interesting to see that Amazon, which obviously has been the guiding light, big horse, one of the top 4 horses with the mega caps, and has gone nowhere really. And we just this month we have broken under 20 months moving average. So again, I keep emphasizing this is as of last 19 days. So this can completely change. But as of now, this is as of last night, actually, we just broke under the 18 months moving average. Our momentum was down, not flattening, but the stochastics showed us down. The MACD crossed over. So would I buy Amazon? Well, I don't have a buy signal on the monthly basis. The same thing when we look at the momentum, how much has changed. And we are it's interesting, Amazon is in a monthly squeeze and a weekly and daily. So it's in quite a few squeeze, and the A wave just went negative. And when we look at the RSI, for instance, we are getting to oversold area, but we are above the 21-month moving average. But don't have any confirmation, as you can see, for turnaround yet. Now, the Facebook, as of now, it's above the 18 months moving average. We are getting flattened in the stochastics, but the MACD did cross. And the same thing, again, we are above the 21-month moving average, but the momentum, you go back, it's 5 months ago, it told us that, be aware. We hit that 1 standard deviation after that, and even the A waves are giving us warnings. So this would have been a time maybe lighten up on Facebook. Now I'm going to talk about a couple of ideas as far as, not the ideas go forward, but I've been playing this. We talked about it. While we look at the Amazon, they're tired, in Facebook, and look at, we've had I've been in and out of Freeport McMoRan, and it had, when you look at it, we call this railroad tracks, how beautifully it went up. And now it's interesting thing that we had the sell-off, as you can see, the stochastics, they went to overbought, but MACD decided, I'm not going to cross, and they decided to come back, and we didn't even get close to it. We got close to 18 months and never touched it. And now it looks like another leg up, and the Bollinger Bands could be actually expanding. So there's a possibility we will not even catch up with that. But there are opportunities. Everybody talks about technology, talks about Tesla, but there are some boring stocks that they have done, actually some of them done much better than these excitement, talk about Bitcoins. But here it is, we had contractions, and that was one of my heads up that I want to go long, and this is on a monthly basis. Look what happened. MACD decided to go positive. We had expansion, and since then, I mean, this was I think I got in like $8 or $10, and then 10 went all the way to $44, $45, and it was embedded for a while. So that's why it's good to see what's happening on a monthly basis. And the other one opportunity, and I think everybody thinks things have to be exciting. Here was Ford Motor, for instance. I had a buy signal in March of 2020, and I think it was about $5 or $6. You can see we were oversold, and then MACD decides to go positive. We crossed that 18-month moving average, and look where we are now. The problem is we are way we've gone way outside that Bollinger Band. So this is as of last night. We hit that 24, almost 25 area. Let me see what the high was. Yeah, 25.13. So that went outside Bollinger on a monthly basis. And this is as of last night. What happened was we did get very close to actually hit the upper edge of the second standard deviation on a monthly basis. So what happened, that was the high, the highest it's been. And I decided to take a picture today before our class. This is as of, again, January 19th. And you can see we retraced. We hit that upper Bollinger, upper linear regression channels, the second standard deviation. And here we are, we retrace. So that's why it's important to have these numbers. So that's, I just want to share that with you. Last but not least is the micron, one of my favorites. Again, we were in the squeeze for a while. We broke out, came back right to the 18-month moving average, and it was in the 60s. I remember I bought options in this area, and then we've had this nice after the earnings, nice move here. And this month we are, getting a little tired, but MACD is kind of flat, and but the momentum on the stochastics is going up. We're an overbought, so we want to watch that micron. And the same thing, you can see we are above the 21 day. We're tired, then we had a nice momentum change, but we probably getting a little tired. But again, the month is not over. All right. So let's take it. This is the picture I took today, right before the class. So you can see just visually, I want to have a reference point. So you can see where the Dow Jones stands. I mean, this looks like a hiccup. It looks like we go 1 month up, 1 month down, 1 month up. Now S&P has been, it's just unbelievable, the parabolic move. And let's see if this support holds. So that's S&P. NASDAQ looks like, we broke this support. We've had a, we're going to the low of this high bar. So is that a turning trend? So we want to watch that. And that's where we go to the weekly. Russell, on the other hand, you can see we were in this range. And today, that 21.15, which was important to me, looks like we just broke below that. So, but again, this is on a monthly, so the month is not over. That's why you have to check the weekly and daily. But as of now, if we took a picture, if it was January 31st, this will not be positive. DAX, Euro stocks, and Nikkei, yeah, the same thing. These are, visually, I just want to see what has happened to 30-year bond. Obviously, they don't look attractive. So perhaps we will see a support right here. Looks like a head and shoulder. This is the same thing, the support. We are very close to major support. So that's the reason I want to do this class. It's because these are like the important times to give us a big picture for upcoming months. And 5 and 2 year, they've been really getting hit hard. So we want to watch that. Now, I also want to see some of the commodities. When Fed last year didn't know we're going to have inflationary pressure or, this transitory. Well, just by looking at the crude oil from 2020, we look at the Brent, you look at gasoline, heating oil, ethanol, natural gas. So, now you can understand why there's that inflationary question constantly coming up. Part of it could be the supply chain, but these are reality. This is what people spend the money in and their expenses. And here's gold and silver. You can see silver has been very choppy, so we are really range bound. So we want to watch that. Platinum, once the economy opens, platinum is really undervalued in my opinion. So that will be something I look at. Look at the copper. Beautiful chart. Now we are consolidating. Looks like a a bold flag right now on a monthly. Look at it if you want to see that. So even you can see a wedge here. We can see the bold wedge, bold flag, or pennant. That this could be a pennant. On top of that, I want to look at the ags. Look at what these are the food related, right? This is what we pay for. This is from oats to wheat and soybeans, and not so much with rough rice, but these are all inflationary. Now, the wheat, for instance, look at this is a big move, obviously, because of the Russian situation, what's going on, and and the natural gas, the same thing with the Russian situation. So basically, these have nothing to do with the stock market, but a lot to do with your pocket and basically what is happening with the food prices. We can't keep going. Look at cotton and orange juice and coffee and sugar. And of course, lumber is a story of its own. So, and last but not least, these are the currencies. I thought, again, you can see where the dollar had been. Just visually, I thought this interesting to put everything together, and where the euro almost opposite of each other. So, and the British pound has its own issues. Today, British and UK and Germany, they come. UK's inflation number was like 5.1, 5.2. I believe it's the highest in 30 years or so. So that's squeezing, and the markets need to respond to that. And then you can see the Canadian currency, more of a petrodollar in the sense that, more of a commodity oil has been working itself up there. So with that in mind, basically, I just want to give you the big picture. Hopefully, as I said, at least to see how I look at things. And maybe, as I mentioned, you can use it as a reference point for some of the numbers if you want to do long-term investing, even short-term, if you want to lighten up on something, if you think there's a little concern that these markets can go down more, well, then, these hopefully will give you some pivot points. All right, with that in mind, we can stop the recording, and basically I can answer any questions